May we live in biblical times. Good morning, good afternoon, good evening. I don't know what time you're watching this. I don't fucking care either. But it is Monday morning, 4:35 a.m. my time. That would be 4:35 p.m. Eastern on Sunday, your time, you guys over there. And I want to get my ass out into my garden as the sun rises and enjoy it, so I can water all the chilies. And yeah, Jim, man, whew, 2 more weeks, man. If you'd been here just 2 more weeks, you'd see the flourish as summer has begun here. But that's not what we're here to talk about. Open the fucking street! Yeah, on Easter Sunday, as Trump posted out there on Friday how the churches will be fuller, the pews will be fuller. He's going to drink his little glass of wine, his little sip of wine, and eat his little cracker, like he said in an old interview, because, you know, he's such a good Catholic. Here he is posting on Easter Sunday on Truth Social, and that's where we have been led to now. Now, listen, okay, let's just keep this fucking really straight, all right? You didn't have a fucking choice in November of 2024 except to either vote for Donald Trump or accept the fact that Donald Trump was going to be your president. So cut all the fucking Democrat, Republican bullshit out. Cut it out. But understand that there is a much bigger picture to all this, like I have fucking been saying. And if you knew the truth, you would shit your pants. So let's get on to where we're going. As you've already seen, I emailed out to you guys. I've made it public because there's nothing out there that can be, acted upon. The Q1 2026 options trading and SPX credit spreads review, plus 90% win ratio. Do what you want. I really don't give a fuck. I talked to you about the Easter week bounce, talked to you about the pre-planned drop, the bounce. Everything was getting ready for the Easter Bunny bounce. What did you get? You got the Easter Bunny bounce. What did you get? You got the Easter Bunny bounce. So Thursday was a little bit easy because we came down to that 64.73, 64.74. That was easy, okay? It was really, really easy. But as we go into the beginning of this week, I just want you to be really aware, before we even get started, that you have 3 green days in a row. 3 green closes in a row. Now, Thursday was a massive reversal day. And typically, that is your sign that a bottom is in and now the bulls have taken over. Typically, okay? We're green on the month after having produced a red month, finally, having had, 9 in a row going into this. We had a green week. We knew we were going to have a green week. And that's the reason why the trades were exceptional that were expiring on April 2 on the SPX spreads, because we already knew there was a green week that was coming. And the same thing as you see here with these plethora of red days that were coming down here in March. 14 red closes, 8 green closes, but 3 red closes in a row, and what happened? Green close. 3 red closes in a row, and what happened? Green close. Here, 3 red closes in a row, and what happened? Fucking gotcha, faked you out, and then you get your green close. So you got that 3 in a row. You're always cognizant about that. Okay, yeah, it's getting a little bit risky looking for that 4th one in a row to be coming, but it's Monday, and other than last Monday, this March 30th, where we closed red, I don't even think we were green at any point during the day. Oh, yeah, we were. We're at 63.68. We had our gap up for the weekend. Boom, easy, simple, here we go. And then the shoes came off after we just started eating a big bag of shit and placed in our lows of the minus 9.79% drop. Can't even get a fucking 10% decline as of now. And again, going back into how this year has been, where was it here in February? Somewhere here in February 23. February 23 right there. That was the only other red close on a Monday that we got. And this isn't something, that you go and bet your life on. It's just something that you notice and you pay attention to and you're cognizant about it because you're playing a video game. Whether you like it or you don't like it, that's the way that it is. It's a video game. But spreads don't really need to cover because I covered that in the video, and anybody who wants more info on that, well, pay closer attention. Your 32 trades, again, don't really need to cover it. Everything's out, paid for, made its money. QQQ. Got your green week. Having had 3 red weeks in a row. You could question that as to whether or not it was actually 5 red weeks in a row because of the fact of those closes at the end of February and the first beginning of March, how they weren't even 1 point green, but you did get 2 back-to-back 2 red months in a row. So you're going to have to be cognizant about that because getting 3 red months in a row, man, you're going to need a hell of a lot more than, Trump, and Lego videos going back and forth. You're going to need a lot more than that. So bear with me here. And on the IWM, which is green on the year, after having 4 red weeks in a row, finally producing a red month after 10. Same thing as the Dow. 10 green months in a row. And we get a red month. Imagine fucking that. So that's where we're at as we head into the start of the first official week of April and the week ahead of earnings. Earnings are going to be starting next week at the end of the week. It's always JP Morgan, Bank of America, or whatever fucking banks they are. Don't even give a shit anymore. That are all going to be reporting at the end of next week, which is OPEX week. And then we go into earnings season. Earnings season where your big tech names start reporting at the end of the. Hang on. I should have a better visualization here for you. So we begin the week, or we begin earnings next week, and then we start heading into earnings for the big tech names, which start reporting at the end of the month. And even though, Google up at 300, Apple up here closing in on 260 again, Tesla wouldn't really pay that much attention to the negativity of it being down here below 382. Amazon, again, still holding the same areas it's been. NVIDIA, you had your chance. You had your chance last week of seeing NVIDIA below 170, 170. Now it's back to the normal programming. 171, 195, 182, that's your midpoint. And then you've got your Facebook, which who actually goes onto Facebook anymore? So that's going to be starting. So where it brings me to be cognizant and aware is when I start coming down and looking at these absolutely, quintessential Fibonacci time spirals. I'm so happy I got a chance to learn them and apply them into what I'm already doing with other things like the Elliott wave, the tracking of the spreadsheet, a couple of other items that I add into, which I don't really mention too often. But yeah, looking at it from the February 19th, 2025 top, no date. December 2025 top, no date. Come over into the September 18th top, no date. And I've gone back and tested quite a few of these things to see whether or not they were accurate. But then we come into the January of 2026 top, 7,228. Like I told you, you've got an 84% probability you're never going to see 7,000s again in your lifetime. 84% probability you'll never see it again. April 25 is when we are scheduled to be putting in a high. Now, don't be some fucking moron and start thinking, so that means we're going straight up until April 25, right? This is one integral piece, which I'm sure that when this was created and the date was posted and the Fibonacci's were inspired how many millennials ago, that they didn't take into consideration that you're going to be going to fucking war with Iran. So, like I said, we keep it cognizant and aware of that April 25, which so happens to be the FOMC meeting, which I don't have on the schedule up here, I don't believe, but the FOMC meeting is going to be taking place later on this month, and yeah, there you go. So it all comes together. So let's get off with this and pay attention to what's going on, because I'm not going to go back and reference it. I'm not checking it. I'm not back testing it. I'm not doing shit with it because I didn't even know about these things when they took place in the beginning, but I was already ahead of the trade as well. Over here on Friday, it came out that the Trump insider just opened up a $40 million long while the markets were closed. I believe this came out on Friday. It's the same person who made the $80 million calling the Iran war. Something massive is happening this weekend. Well, you wouldn't know that from anything that Trump's been posting. And as far as things go over here, yeah, they're still pretty shitty. Don't take into much detail that report that came out about Iran and the Philippines and, you know, them agreeing. Philippines doesn't have any boats with their own flags. I believe we do. We've got 5 or we have 6, I was told over the weekend when I was talking about this. They're all shipping containers. And there's only one refinery. One. Petron. That's it. So we import our fuel. So, you know, them letting Filipino flagged vessels go through, man, you know, I'm not paying too much attention to it. So anyway, let me get off this and get on to, not your mama, but let's get on to the charts. So I'll back you into here, right? Here we go. This is what I'm using for day trade, 0 DTE. Big nice gap over here from Tuesday, unfilled. Big old gap there down below still, 62.71, 62.37. And there is your big fat 400-day moving average, as well as your minus 10% line at 6302.05. Now, guess what? I'll have to pull up another chart, which I do not already have pre-prepared, but I am good to have pulled this up because let's look back here at the 5-day, 5-minute, and zoom on out here and look at that. Look at that. Look at that. A wick. A fucking wick on March 30th at 8:20 p.m. A wick pierces minus 10% on SPY. So it could be that you've already placed your bottom and it's all over with. That's it. Just like what happened back in August of 2024. Same old shit. We'll see. But the VIX, that's a juicy one right there. This VIX coming down here to that 2371, just like it was back here over on Wednesday before this move that took place there on Thursday. This VIX coming back to 2371 is juicy. It's juicy, juicy, juicy. Like we used to say at the restaurant I worked at when I was a teenager, Juicy Lucy, because she was the sexiest waitress we had on staff. 2102. 2102 is waiting. 2102 is waiting. 2102 is waiting. And I don't recall this candle here back on March 23 at 7 a.m. I don't recall it. I don't recall why. But there's a 2028 wick. So I'm still looking. And you can almost see the structure right here of your wave down, your 50% retracement bounce that we had there going into Thursday, and your next wave to the downside in order to complete this. You can almost see it and visualize it right there that we should be seeing the VIX come down there to 2102. So enough of this. Let's get off of that, you know, because Her knees are all scabbed up already. I got rug burn. Here we go. So this is looking at a 10-day, 10-day, yeah, 10 days. So 10-day, 15-minute chart. Again, how we keep coming up to that problem there at 66.12. We had the problem 10 days ago, 66.12. Problem, and we're back at that problem. We've come to this problem now twice. Came to it on Wednesday, came to it on Thursday. We've got 3 green closes in a row as we head into Monday. So again, being cognizant about that. I can see this in 2 different ways. Okay, and neither of them are wrong. They have to be proven, but neither of them are wrong. The bounce coming off of that low that we placed there on Monday, the end of the wave with the wick on SPY going to minus 10%. A 1, 2, 3, this drop here on Thursday, which is typical of a wave 4, being the wave 4, and now we have one more wave to the upside, which would fit as I've shared. For that 66.12 problem, the 200-day moving average, which is now up at the Epstein files, which is at 66.40, would fit. And then another dip, which fits Trump's timeline because he's going to shit all over himself in public on Tuesday at 8 p.m. when he goes after Iran and their bridges and all their power plants, which, well, whatever, man. I really couldn't give a shit what you think about it. So that very well could be our view. It could be as well that this is a much zoomed out view. I'll pull you out here. Pull you out. Should have done that a few times in my life. Pull you out here where this is not that. In fact, here, I'll do it with you here to show you that that is your A wave. This is now your B wave, that bottom there on Thursday. And we are looking now at a more typical structured bearish B wave bounce, or wave number 2, you do not know, which would be taking us up here into this, call it 67.40, 67.60 area, or the AKA highs from St. Patrick's Day, right around that area. Could very well be that's the structure. And with that date being April 25th, could very well be that it's April 25th when we get up into this area. After the 9th ceasefire, delay, taco, whatever takes place coming later this week. However, as you are seeing this blue trend line, which is coming to the downside, which is, as I shared for you in that message there on Thursday or Friday, you are here, you are here, you are here. Well, what you're not seeing is that you are here. This trend line here that's in red and yellow, and the reason you don't know and you can't see it is because you can't see it. So let me go ahead and zoom out a little bit there. And that's where that trend line stems from. You're coming off of your 2022 top into your February 5-year anniversary of COVID top last year, 2025, before the big drop there on the tariffs. That's where that trend line comes from. That's where that trend line stems from, right there. And we're just fractionally below it, right around 66.25, just below the 200-day moving average, right above that 66.12 problem area. So be very understanding from your point of view about overexposing yourself in any way, shape, or form to the bullish side. Be very, very aware of that. Or get pitch slapped, whatever you choose. But again, as a minus 685 point drop to the downside, which took a little bit better than 5 weeks, a little bit more. This was back in, what was January 27th, and we wind up bottoming here on March 30th. So 2 months to get minus 685 points. Took us 3 days, 3 days to get 292 points. Almost half of that back. So again, cognizant of this 67.40 to the upside. Cognizant of that 64.75 to the downside. And again, coming and looking at it from a clean and simple point of view, having had 5 red weeks in a row, yeah, getting a green week, yeah, that's pretty fucking obvious. But again, having gotten to ourselves from that oversold level, very easy to get yourself overbought and you bring yourself into looking at it from a zoomed in point of view from the daily. Boom, again, sitting there oversold, 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 bam. Well, we're not overbought, but again, as you can see, this clearly defined declining trend line of relative strength starting back well over here back in September, having peaked overbought back here in, come on, let's go, back over here in July of 2025. I wouldn't put a lot of faith and effort into trying to expect that you're going to see your relative strength get overbought to a clean textbook technical overbought before you wind up exposing yourself for the next downside move. The NDX, 3 red weeks, 3 red weeks, 3 red weeks. Here you are. Look at this. This is a death signal with the 50-day and the 200-day moving average clearly prepared to be crossing one another, which in my opinion, looking at it from the NDX, this will not be taking place for another week. I don't think that it'll happen this week, but as we head into the beginning of earnings, OPEX week in April, we should be seeing the two of these converge and start to begin to make contact with each other. Looking at the Dow Jones, once again, from the Dow Jones point of view, as we had multiple red weeks in a row coming down to the 38.2 retracement, coming all the way back right to the highs from back in February of 2025 before the tariff dump. That's it. That's your bottom for now. That's your bottom. Do not get any lower than that. That's as low as you're going to go, and that's your bottom. And then you come over to your QQQ. How, ooh, look at that. We made it down below 559, and we spent a couple of wicks. That's it. And here we are pushing right back up into that 600 level, holding on to that 580 for dear life. So, for me, yeah. As you can see, that you are going to get your crossover relatively soon of your 50-day and 200 days on the QQQ, the NDX. 100-day and the 50-day crossed over early part of the month. I'd expect there's a high probability that we're going to be seeing QQQ 600 before we start looking at any kind of opportunity to get short again. Over on the IWM, hey, man, this thing's strong as fuck. Strong as fuck. 271.60 is where we wound up peaking over there in January. A nice ABC with a 1, 2, 3, 4, 5. Either way you want to look at it. Bottomed out, clearly bottomed out, coming down there to that 242. And now we're pushing already back into the 251s. And the reason why that matters as far as talking about these numbers, 251, 250 that, 250 this, is you're, well, actually, I got to go back further than this. I've got to go back 10 years to show it. Not 15, but 10. Oh, I didn't. Sorry. 2021 highs, 244. Your 2024 highs, 244. And here we are supporting on 244. So as bearish as everything wants to appear, because there's this huge fucking, gonna nuke the Middle East. There's no oil. I'm going back to the Stone Ages, and I'm gonna be pushing a fucking cart down the road where the fuck am I going to push a cart to? There's nothing in the fucking store to buy because nothing can get fucking transported. So it is still, again, when you need to go back and look at it from a clean, get your head out of the fucking social media bullshit news point of view, where's the panic? I mean, where's the panic? We should still be looking to clean it up, get our drop down around to that 5,500 level, and from a clean point of view, we will have technically been able to produce our bullish wave 4 low for this final 5th wave of the final 5th wave, and then attempt to make one last move to the upside, but not until we get our dip cleaned up. Call it what it is, call it what you want, but that's the way that the bigger, broader picture views still for right now. As long as we hold and only drop down to 5,500, everything's pretty copacetic. We break down below 4,800, and that's when you know you're fucked. I mean, I'm not joking about this. You're fucked. And all of you who are living in mortgage, day-to-day, 9 to 5, illiquid, you're fucked. So get your shit together, because I like my chili peppers. I love my fucking swimming pool. And weekends like this, where I get to go to bed at 8 o'clock at night and wake up at 4 in the morning like a normal human being, I love it, man. I'd love to do it every single day. So enjoy your weekend. Enjoy Sunday. Happy Easter. I apologize if I offended anybody, but actually, if you got offended...
Queridos amigos de Cuba, les habla su presidente, el presidente Trumpo. Actually, right now, I'm not your presidente per se, but if you think about it, why not? ¿Por qué no, muchachos? El presidente Trumpo es mucho fun. I love the fiesta. I love salsa, both the music and with nachos. We can have fiestas every single day with delicious mojitos and sexy mamacitas. Anyway, I hear you're running out of oil. Esto no bueno. Might be time for el people of Cuba to get rid of your leaders and join el presidente Trumpo in making el Cuba great again. Comprende, muchachos?